Hello, we are live,
Hello, hello. Hi, Valley. Hi, everyone.
and your timing
Was
is
just
perfect. Can we
setting
can we
everything
quickly
up.
take a minute? Yeah, can we quickly take a minute to share this live with our audience? And I can't find my phone. Okay, let me do it from the laptop here. Alenka, I would request you to do the same.
Sorry, what should I do?
Could we share the stream on our profiles? So,
Oh, okay. Let me try then. Yeah.
and for everybody else joining us, welcome back to Aura 8. Today happens to be our 78th episode. We'll be talking to Alenka from at Aura 8. Alenka, let me know once you're done so I can bring my questions to you.
Yeah,
And
Valley, I think we could start. Let me just repost it afterwards because I think it would take a while. I've never done it before. Well, okay, to be fair, I've done it once, but I don't remember how to do it. And I don't think we should waste our time doing it right now because I need to log in, like connect all the different platforms like LinkedIn and X. So, man, shall we just skip
one
if you don't
sec.
mind?
No, but I need to post. So give me a second.
Sure. Yeah. No. Sure. No worries.
Okay,
No
cool.
rush.
It's done. Well, this evening we are sitting with the operator who went from MGIMO to loose to building Web3 founders in a warehouse in Turkey to scaling Telegram's chain towards $1 billion. Who is now putting real commodities on rail. She co-founded ex-founders. She led ecosystem at Dawn while Telegram was sitting on nearly 1 billion monthly users. Uh, so she grew soft skillers from 167 readers to 100,000. And right now, as the head of tokenization at Atom Real Tokens, she is one of the people actually moving RWAs from narrative to institutional products. Please welcome the woman who treats ecosystem like a product, Alenka. The floor is yours. Please go ahead and tell us how was Turkey for you.
Wow, Valley, that was such a wonderful intro. Thank you very much for that. I'll maybe just introduce some corrections to what you've said, but overall it was pretty correct, pretty right. Yeah, my name is Alenka. Very very nice to be here today with you guys. Very very proud and happy to be part of this amazing space. Tokenization, the Web3 industry generally, which is being increasingly merged with traditional finance these days, which is, I think, a very positive and very relevant trend. Talking about Turkey, wait, are you referring to my very recent trip? It was just, a personal trip to attend a friend's
Ah.
wedding. Do you want to hear about it?
I would love to, but then let's talk about you went from Telegram 950 million users tap to earn the most retail distribution in crypto history to a product with over 300,000 as minimum ticket. That's an opposite direction, Alenka. What did you learn at Ton that made you go institutional first?
Well, it's kind of completely to different worlds, right? And well, Telegram and like Ton in particular, that's how the chain was called back then when I was director of ecosystem at Ton Foundation. It's really, you're right. It's about retail distribution first, so that was really our focus, right? And hence, we're really concentrated on helping build retail apps like consumer apps, tap to earn games, play to earn, all the different types of games, I'd say, social experiences, right? So, because Telegram is all about communication, and that's the path that the team is, still undertaking. Even though, we tested all the different directions. And tokenization as such was something I was very excited at the very beginning, even, before Dawn and before X Founders, the accelerator that you mentioned, I co-founded with my other two co-founders. Even before that, my very first entry point to the ecosystem was a real estate tokenization project. Was back in 2020 or 2021. Don't really remember already. It's been ages. It was very early, right? But like my point is, that's where my interest really stems from. That was really the thing that fascinated me from the very beginning. And I think again, like that's where we're all headed, bringing real assets on chain. That's where we'll end up. So yeah, what I was saying is like real estate tokenization. And then, I mean, again, you can bring all the different types of asset classes on chain. It really depends on the value you're trying to bring by doing this. But talking about Telegram, since retail distribution was our focus, RWAs as such weren't really the major thing. I mean, wallet and Telegram as a flagship app inside the messenger did manage to bring, for example, tokenized gold in collaboration with Tether, or tokenized stocks in collaboration with X stocks, or backed finance, to their retail audience. That was really, a major breakthrough for the ecosystem. But as we know, those two asset classes that I just named, which is tokenized commodities and tokenized stocks, are the ones that are mostly distributed in the entire space, right? It's not only true for like Telegram and Wallet in particular. Among 2.8, I think, million tokenized asset holders right now in the space, over 75% are the holders of tokenized stocks, right? So what I'm saying is this is an intrinsically retail focused product that's already like a security. The underlying asset is a security. The regulation is more or less clear. Like it's much easier to distribute such an asset versus, for example, credit. And we see so many credit, like tokenized credit products right now, but it's so hard to distribute them to retail audience, right? So what I'm saying is Telegram, Wealth and Telegram, they start with, I mean, an easy in a good way, an evident asset class, which is stocks and commodities as well, because gold is not a security per se, right? It's a commodity. It's easier to distribute it. So these are the two asset classes they focused on, and it really worked. It has worked pretty well, right? I can't really tell you the numbers because I haven't really been following the recent metrics, to be honest. But that's a clear use case. That's a successful use case, I'd say. Talking about other asset classes, like we were trying to bring, for example, Telegram bonds, right? That's already a much more complex thing to do. And again, whenever we are talking about retail distribution, we need to, tick so many boxes. We need to think about regulation, first of all, right? Compliance, like how exactly are we going to structure the product so that it's compatible with, the structures that already exist for retail distribution, so that the SEC or the analog of SEC in any other jurisdictions that we want to tap into does not come to us one day and say like, hey guys, what are you doing here? Can you clarify? Like, are you just offering securities to retail without proper registration of the offering? That could lead to very serious problems for the team, for the product, for the ecosystem. So it was kind of hard to expand, to go beyond those two asset classes that I already talked about, which stocks and commodities. Now I'm kind of very, very flexible in terms of what I do, right? I work with different teams with different companies. You are absolutely right in mentioning commodity finance. So Atom Finance is a team I work pretty closely with as head of tokenization these days. There are other very interesting projects, like for example, the ones that tokenize solar energy, that also help with growth strategy, go to market and distribution. So I'd say like I have a very, very interesting set of teams in my portfolio right now, and my focus is rather broad. And I'm particularly curious, I'd say, about the credit space. I think that's really where a lot of value is, a lot of still hidden value, not yet unleashed. Yeah, let me stop here. I talked a lot, so go ahead with any questions or nuances that you want to know.
Let's talk about your last week you had posted. The first question I ask any user is, why do you tokenize? You cited Paretos, about the 100 BPS lower cost of capital. What are Atom's numbers? How is Atom performing?
So with Atom, we're only starting out, right? So we're tokenizing first deals this month. So there's a transaction that we'll be launching very soon, which is a short duration trade finance type deal. That's a commodity finance, like very, very classic export operation, where one operating company is selling copper concentrate from Kazakhstan to China, and I went to Kazakhstan to do the very final stages of due diligence. So we visited the mine, the concentrator, or the processing facility, talked to the exporter, really looked into all the documents, all the processes, like logistics as well, which is a pretty important pillar of this process. So essentially, this team they just need working capital to scale operations, right? So they buy raw ore, the copper, they process it and they sell it to China. But in order to deliver this transaction, they need operating capital, they need money upfront, which the Chinese counterparty can't really provide, based on some legislative limitations. And hence, we are financing this transaction with our network of LPs. In terms of like we provide this working capital, earning on the contractual spread, so the difference in the price for which the exporter buys the ore, the raw material, versus the price at which they sell the ultimate concentrate to the Chinese client. Very easy, anyone familiar with trade finance would easily understand what I just said. The thing is, it's a real world transaction, right? So the returns here are generated through real world activity, real operations, right, which is already an established process for this exporter. They just need money to scale to achieve higher numbers. They already have a signed 12-month contract with this client. They just again need additional money to scale it, to deliver in it successfully. And yeah, so then it will be turned into a rolling structure where every single month they will be delivering this particular amount of tons of concentrate to the Chinese counterpart, so that we can provide a 20% annual return to LPs that will be participating in the structure. Capital will be reinvested every month.
20%.
Twenty
Did you
percent
mention
annualized return.
20%?
Yeah, 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 yeah.
That's a brilliant number. So, what I need to in the due process when you had like 15 meetings and you came back with 3,000 plus exploration license issued, only 91 extraction licenses tokenized, you know, doesn't really drill holes. What actually closes the gap in terms of these, on ground projects that need funds and the retail investor? What do you think actually closes the gap according to you?
Well, unfortunately, we can't really talk about retail investors here, or fortunately, I think more fortunately than unfortunately, it's still too early, right? So, like, I think you're referring to a particular part of my post where it was just, market observation that very few number of operators actually went from the exploration phase to actually mining the material, right? And here we don't talk about this trade finance transaction anymore, because with trade finance, that's the first operation that we're launching again, like next month, in September. That's already an operational flow, right? So this particular exporter, he has a mine with which he's been working for some time, right? He has a processing facility, so that's an established operation. What you're referring to is the industrial process, right? Of like exploring the deposit, right? Like finding this deposit and understanding like, okay, here's copper for this particular amount, right? And this is confirmed. There is a report that confirms it according to like international or national standards, right? And then we need to start extracting this material. We need to start mining operations, right? Then we need to process the ore into, in our case, if we talk about copper, into the concentrate, and then we need to sell it. We can refine it. It will be a metallurgical process, and then we'll get, like copper cathode, which is really like high level. That's the ultimate goal, right, of the entire like the industrial chain. Um, but again, this is a separate conversation. I'm actually like, the more I immerse myself into all this industrial process, the more I understand that, where the value is created. And it's great that we in the in the technological space, we have the tools to increase the efficiency of how those industrial processes can work. But that's also a topic for a separate conversation. So what I'm saying is, in Kazakhstan, and particularly in Central Asia, and in many many regions around the world, the this gap, between the exploration space phase and the mining phase, and then the processing phase, which is the industrial process itself, is really large because there is not enough financing, right? Like, people that want to operate a mine, they need a lot of capex, like a lot of costs, to actually start mining, to get the material, and to then send it to a processing plant, right? And then, well, to build a processing plant, you also need money, right? So it's all about like funding and finding the right people, the right institutions to fund those processes. Traditionally, those are banks and like large like trading firms that finance such operations, right? So the market is very limited to this very, very few players. Hence, private capital around the world doesn't really have access to such structures. But the yield there is very lucrative, is very attractive. So 20% that was on the trade finance operation I was referring to. Here we're talking about from 15 to 30% of annualized returns, right? For example, for financing mining operations, like construction of a processing plant as well, right? So again, it depends, but the yield is very attractive. But private capital has never got access to such structures, and that's what Adam Finance as company is trying to solve, right? To find this best projects, do due diligence according to the best industry standards. Yeah, find those projects and then offer this project to private capital around the world. And blockchain as technology just helps us do it in a more efficient way. Again, blockchain here does not help with, distribution, or I mean, it helps with distribution, but with time, right? It doesn't help with immediate liquidity. No. It's just a technology that improves the process step by step, gradually, right? And then ultimately, like, once we finance the mine or the processing plant, after successfully doing a primary sale, primary offering, then there could be secondary market, and only then, at the very last, very ultimate stage, retail could participate as well, right? But obviously, this is not offered to retail from day one. This is just out of the question. So yeah, but this is fascinating, right? And here, what I see in this project is the ultimately, like, the proper use of technology to increase capital efficiency, to change the capital formation per se, right? To make the structure more liquid, more transparent, and more accessible to private capital across the globe. Again, not talking about retail here. First of all, we're targeting
Got it.
institutional capital, right? Like, it could be high net worth individuals, family offices, of course, like not only, large hedge funds or insurance companies, but not retail. That's my point.
Got it. Uh, I want to talk about lessons from the last cycle. Ton peaked, I think, near about 770 million
In
TVL.
TVL. Hmm.
The active wallets fell from, I think, 9.2 million to 6.8 in a single month when the incentives kind of normalized. You lived through that. How do you make sure that RWA doesn't rebuild the same incentive mirage with better paperwork?
Look, to be honest, I don't really see too many incentives in the RWA space these days. Luckily, I think we're already over, those blow numbers, artificial rewards. This is more crypto native stuff, right? RWAs intrinsically also bring traditional tools and traditional methods of attracting capital and retaining it, right? Because retention, that's the ultimate bottleneck, as we saw in the industry. So since today the RWA tokenization space amounts to around like 38 billion. We can double check the number, but that's the number from yesterday. I tend to check it every day, but I think, yeah, I forgot to do it today. So 8 billion, somewhere around that. Like, most of it is institutional capital, right? Those are the clients of like BlackRock, Apollo, Dennis Henderson and other asset managers that already entered the space and brought their capital with them. I mean, their capital meaning the capital of their clients, right? And so they don't really need to incentivize those people to come, right? It's not that they're offering like additional yield or points that will then out of a sudden turn into real money after the airdrop phase. Like no one's talking about it. Obviously, there are projects that plan to launch the utility token and organize different reward incentive campaigns around it. But that's a very tiny part. Like, I mean, that's a very nice part if done properly, right? And we've seen good, successful examples in the industry as such. But this is not the major narrative, and I'm very happy about it. So I think like we've learned our lessons as an industry, and I don't really hear a lot of like incentive campaigns happening in this space. If I do see some of those, I can say that I'm quite happy about how they're done. I think that's the right way to approach it. And again, it must be seen as an additional complementary element. Obviously, not the major driver, the major incentive for the people to come. The major driver here is obvious. These are real world returns, like the yield that's generated through real activity, not some kind of artificial temporary stuff happening on chain. These are real businesses. These are real, well, in case of atom finance, industrial processes, right? That you're financing, for example, through a pre-funding structure, through a trade finance structure. But this is money that goes to fund something real, something in the real world off chain that is brought on chain in a proper way and helps you generate a return here with all the all the beauty and all the benefits of a structure existing on chain.
And I think in 2024 onwards, we were shouting on top of our lungs that RWA is going to bring in the bull run. But clearly that didn't happen. Do you think RWA missed being a part of the bubble and just went into mainstream directly?
Well, it really depends on how you assess it, right? Because I mean, a 30 billion dollar market is already a good milestone, right? Compared to what we had like 2 or 3 years ago, which was literally like under 5 bill, maybe even under 1 bill. So I don't really see this industry, I mean, this particular market, right, RWA market, as part of any kind of bubble, or I don't really expect this growth to happen in one day, because
So
then
exactly my
yeah,
point, that have we just moved on being to institutional directly, then being a
yeah, I
part
think.
of the bubble?
Of
Yeah.
course. Of course, yeah. I mean, well, again, depends on what you mean by the bubble, but it's definitely not like retail growth, right? It's not like a one day immediate mass adoption, and it's not supposed to be so, right? It's like institutional capital first, and I tweeted about it just yesterday, right? Like among the protocols I'm in touch with and monitoring, I'm working with, every single one, especially in the credit space, starts with institutional capital. That's a no-brainer, right? I mean, you need large money to come in to show their interest, to show that they trust the structure, they're ready to risk their capital, their clients' capital. So once those established guys come, fund you, you're able to show traction, you're able to show like PMF, product market fit, and then you can go and distribute it to retail under a compliant regulatory clean structure. That's how I see it, and that's how every successful so far protocol in the ROE tokenization space has implemented it.
Let's talk about all the weird things that you have seen being tokenized. I remember listening to whiskey being tokenized, which is not weird. I think that's a great concept because there's a particular process to what's the word? Brewing whiskey? No,
Yeah,
I can't
brewing, I think
remember.
they brew it. I mean, again, I
I
hate
think they
whiskey,
brew
but
beer. They don't brew whiskey. But yeah, something
I,
around the
I can talk
block.
about wine if you want.
Okay. So we have seen whiskey, we have seen gold. I think gold is the most safest. And I think anybody from an Indian family would tell you that gold is such an important part of a culture. I in fact, kind of giggle when I see Chanel or these big fashion brands, or even legacy brands for that matter, when they talk about their jewelry being in 14 carat or 10 carat. In India, it is not considered gold. Gold has to be 22 carat or bare minimum 18 carat. Anything below that is not considered gold at all whatsoever. And Indian
You
housewives,
know what I learned that for Turkish weddings, so since I attended one this weekend, the major gift is gold as well.
yeah,
Only for women though, because I think in the Muslim
men
culture, men
can't do it.
can't.
Yeah.
Yeah. Very interesting. Okay, yeah. So yeah, we can
Good.
tokenize all of that. So what's the question?
My question to you is, what is the most weirdest thing that you have heard, or somebody's come up to you saying that, hey, Alenka, I want to tokenize this?
Look,
Oh,
somebody
I know you have something really interesting in your head. I saw it on your face. Please tell us.
No, look, in terms of like real cases, because again, like there are so
No,
many
forget
crazy
about it
ideas.
being
I
a
don't even.
real case, but I'm saying
No, no,
somebody came up
no,
to
no,
you and like his fantasy is to tokenize like Ferrari, or tokenize something like really weird, and then you actually rolled your eyes like exactly what you do now.
Look, I guess the weirdest case was tokenization of like animals, and the first case I heard about was the tokenization of horses. I think it was like two racing horses that token vest a UAE Dubai based tokenization platform, which are very well known, very much follow, has tokenized as the very first case. Probably not the weirdest thing. Again, that's just the first thing that comes to mind. I think at one very nice conference in Dubai, we were also discussing this strange cases of like animals or like I don't know parents or like your I don't know dad like grandparents or something. Look, I don't remember that. This is crazy. And again, it just doesn't bring any value. It's a joke, right? But racing horses, I mean, they can generate a return, right? So that's the point for tokenizing them. Again, there are so many different questions like how scalable it is, how you sell
No,
the story, right?
let's not get into the technicals of it. Let's just talk about the novelty of it, right? Because
Well, the
I remember
novelty is
some.
you're just tokenizing an animal. Whatever, like if it resonates with someone, then I'm happy. Like again, from like with me, it resonates as long as it generates money and it's scalable, and and it will drive the space forward. These are the three things that matter for me.
Yeah, in fact, I personally believe that the more uh, novelty stuff that you tokenize will bring in more noise, right? Because in media, what happens is that you talk about tokenizing a real estate, they're like, yeah, okay, it is expected. But then the moment you talk about saying that, hey, I want to tokenize a public swimming pool, I think that would bring in more eyeballs to it than perhaps tokenizing a regular asset. Now you
Eyeballs,
also,
no, Bali, eyeball. Wait. I
yeah,
want to
okay,
argue here. Eyeballs,
okay.
yes, but would it really bring any value? That's the question, right? Because in terms of like media attention, yes, of course, but well, we need it as long as it will, bring more money into the space. And bringing more money into the space means working with institutions that will bring this money and will make sure this money stays, right? So it's not just us yet again like talking about tokenizing interesting stuff, but really keeping this money on chain. But again, I agree, like there's no single right strategy. If we approach it from many different standpoints and many different angles, then we'll achieve this kind of joint aim of tokenization becoming a larger space and becoming really mainstream in a good sense of it.
I really like how your perception has shifted from tap to earn to institutional
I was
focus.
never I was never a fan of tap to earn. Let's clarify that.
But
It was like a
you
very
were part of
organic
that
trend.
ecosystem,
I
right?
was part of it. I think it was a really like organic and needed phase for the ecosystem, and it brought a lot of fruit, a lot of results. Again, like I don't think we should ever kind of underestimate or like put a large cross on it because it hasn't really been a sustainable narrative
Yeah.
in the long run. It was just a very important pillar, important phase that the ecosystem needed to have gone through.
Absolutely. And it put Dawn onto the map like never before, right? Because earlier it was just
100%,
another
yes.
telegram message, but tap to earn. Uh, and,
and ag- and
and
and again, Valley, like we're talking about two completely different worlds here, right? Institutional
yeah, we
capital,
are.
as you very correctly mentioned in the beginning, like retail oriented products, and institutional capital bringing their clients, tokenizing funds, tokenizing all the different structures they have, completely two different worlds. And I'm very happy to have been sitting, um, kind
On the
of on
cusp of both.
exactly.
I know that I have 30 minutes with you and we're just on that. Now you also get an opportunity to talk to many interesting people around the world via your series. Please go ahead and shill it for folks who are focused on RWA. But what I also want to know from you is, what are some of the most interesting conversations you have been a part of, and how do you see the future of RWA shaping up with the founders that you speak to?
Well, since I've also started co-hosting a podcast recently, as you may have seen, right? It's called On-Chain Honestly. Highly recommend everyone, sees checks out a couple of episodes with a lot of effort into it. I think we've had like really great, very interesting guests so far, like representatives of different blockchain foundations like Polygon, Avalanche, Aptos, and many others. We've just recorded an episode with Tempo, with their go-to-market team, which was really interesting. A lot of RWA protocols as well, like Pareto, the one that you referred to previously. Then there was also we discussed tokenization with Avalabs, which is the Avalanche ecosystem, Symbiotic, which is building a very interesting solution for RWAs. So highly recommend you guys, if you're really into the tokenization space, just check out some episodes. We always tend to structure them in a practical way, right, to extract the most practical value possible from every guest that we invite to the pod. So I would say that all these conversations I'm part of right now are very, very interesting, and we're talking to many more interesting players, starting with largest payment players in the traditional world, and going up to different tokenization players as well, but I can't really talk about it yet because we have not released the episodes. But what I wanted to say is that I'm very happy to be part of this like broad conversation, just because it helps me understand where the
What are your
industry is
top
really
five
headed.
takeaways? What are your top five takeaways from these conversations that actually gave you a different perception?
Well, the pie is so large that I don't think we should be talking about competition between different RWA protocols as of now, just because again we're so small as an industry, right? 38 billion versus trillions in TradFi. That's really nothing. B is, I think I already kind of alluded to it, bring in institutional capital first for most RWA protocols. That's the reality right now. They need to stick to. Well, third is, yeah, I think I'll just focus on three. Thought will be, I mean, understand the reason why you're tokenizing, right? I think you also referred to that tweet of mine. There should be value, right? Again, there's so many things around us that we can tokenize, like I don't know, glass of water, whatever. Like it needs to bring value, it needs to change something. Why are you bringing it on chain? It should really be a small kind of revolution in your particular niche. If there's no revolutionary element, well, it could be like very relative, right? But there should be some improvement in efficiency. If there is no such thing, then you probably better do something else. So I'd say these are the three takeaways I've had after all these multiple conversations that I actually take like every single day.
Got it. Now, for example, since we stay in the same country and city, if somebody wants to tokenize their flat, what is the entire process? Can you walk us through it?
Well, why would they want to do it?
Because they want to have more liquidity coming in, and then they can actually rent out the flat and share the revenue with their uh, holders.
Right. So they're ready to sell either part of the flat, right? Like maybe continuing to be like a shareholder in this SPV that they would need to open, right? Or like just sell entirely. Well, I'd say if you're an individual person that wants to do it, you definitely don't want to build an entire platform for it. Just find a good tokenization partner. There's so many different players. Like Pripco is probably the one that everyone's heard of, at least in the Dubai market, right? They've launched their first pilot under regulatory framework, together with major ecosystem players, also with DLD, which is Dubai Land Department. So that could be one. Tokenvest, as I said, is really a major player in the local market. They're tokenizing real estate on BNB chain. I just saw Scott's LinkedIn post about it. Scott is the founder and CEO of Tokenvest. There are so many other players. I'd really highlight Nomics as a great tokenization partner here. So just go and talk to
So
those
how
platforms.
how does the
See,
process work? How does the process work? So I take a flat and I say, okay, I'll go to, for example, Token West, and I want to tokenize my entire flat. My flat is worth 1 million dirhams, and I want liquidity to perhaps invest further, and whatever rental yield I generate, I'm happy to share it with my holders. So I go to Token West and I say, hey, I want to tokenize my flat. They say, okay. They put it up on their marketplace. And then how does the process work? Can you run us through it so that anybody watching this will get a far more clearer idea on how tokenization actually brings in money into their wallet?
Um, yeah. So, Valley, can we maybe save it for another time? Because I really need to go, unfortunately. Have a call scheduled. So we can maybe organize like a different stream and even, invite Scott to share the whole process. But I mean, we're kind of right in like underlining, breaking down the basic steps, but it's really a separate conversation. I don't want to do it very briefly, so we'll probably need more time for it.
Sure, sure. Because I think one of the biggest challenges of RWA is off-chain and on-chain, and I wanted to talk about that. But clearly, we are above our time limit. But thank you, Alenka, for having a chat with us, and keep doing what you're doing. Uh, and we will see you the next time. But once again, thank you so much.
Yeah, Vali,
For
thank you so much.
everybody
It was a
watching us,
pleasure.
so everybody watching us, thank you. My name is Vaibhavv Ali. This is Aura 8. We are on the 70th episode. Last week we had a killer episode. It is already live. Go and check it. We had, for the first time ever, the godfather of crypto and the godfather of AGI together on the show. Next week we are having some very interesting lineups. You should go and check it out, and come back if you want to be a part of more conversations on Web3, AI, blockchain, agentic AI, RWA, and stablecoins. Alenka, thank you so much.